Check, check, check. All right, greetings traders. Sam here from TradeDevils.com and TradeDevilsIndicators.com. Today I'm here to introduce to you the Trade Devils Trend Rider. Now this is a trend following indicator designed to get you into trends and give you opportunities to add along the way. So it's, at first glance, it looks like a bit like a parabolic stop and reverse, and there are similarities to that kind of approach. What we're doing here is we're tracking the volatility, and then we're using these little dotted lines to establish when we have potential trend reversal, and then as a trend established here, I mean, obviously Friday we had the monster rip. As the trend is established, as the volatility is increasing and the trend is moving in that direction, it's giving you opportunities to add on either pullbacks or additional breakouts. So I've got a 377 tick chart here in the YM. I'm running our tick size calculator here. Now I'm using a 377 even though our tick size calculator is suggesting a 512. It's doing that because of the last move up here was so extreme. It went out to a 512. But I know just from trading this for many years and using these tools that typically the YM would be, you'd more likely find it at a 233 or a 377, maybe a 512. Those would be more typical volatility ranges that you would find in an approximation between the 1 minute chart and a tick chart. So I'm going to stick with the 377 here. Again, this is a bit of a distortion, right? So this was just a monster trend. So we'll look at it both on Friday's data, but then we'll go back through the week. Now, there's a couple of things to note here. Of course, I always have our initial balance on just to try and frame the day, so I get a sense of the opening 30 minutes, where we open, and then the 60 minutes that establishes the initial balance. So I do that just to kind of frame the day. So as we look here, obviously it's very easy on the eye to establish when we move from downtrend to uptrend. This indicator really excels in trending markets, and as any trend following approach, you would find that it struggles when we're in range-bound markets here. But when we get moves like this, right, it's just gorgeous, right? Even some of these, I mean, we've had a lot of volatility lately, but some of these smaller intraday trends can really be profitable, right, if you're positioned for them. So let's just go over some of the some of the parameters within the indicator, and then we'll look at a few ways that you might approach using this. So let's just dig right in. So I'm going to go to the indicator. And we'll just bring, let's bring it up here, I guess, on the left side, and we'll kind of shrink this down and make it a little bit easier to see more of the chart. Okay, so as we look here, so these are the default parameters here, which, I mean, this is, of course, a good place to start, but if you're trialing or if you buy it, this is how it's going to come. So we're looking at a 10-period ATR with the ATR multiplier set to 3. So I'm looking at 3 times the average true range over the last 10 periods. Now we have the option to paint the bars or not paint the bars. I think, again, it just makes it easy on the eye. We have pullback ticks because one of the options, if I can find one here, so here's a couple right here. If we have a pullback within a trend, that's an opportunity to add to it. Pullback needs to be a minimum of 2 ticks. And then we've got our entry line here, which is the little green and the magenta lines here. As I go through the settings here, these are potential entries to either enter into a trend or perhaps add once you're in a trend. So we're giving you those parameters there. You can set alerts, right? So of course, anytime we get a trend change or a pullback or a breakout, an alert can be fired. That's up to you as to whether or not you want to have those. Just bullish and bearish colors here in terms of the paint bars here. The text font, right, just in terms of the size here, that would be relative to the statistics we'll get over here in a second. The statistical font here, I have it just set to 12. I keep the background transparent so I can just look up here and quickly spot it. And then color coding here, again, this is all customizable based on your preferences of color coding. But these are the defaults. The pullback will be in green, the breakouts will be in red or blue, and then we've got our trend reversals here, which will dictate how the ATR line is color coded in conjunction with the trend and the bar colors. So, and then additionally, we've got long and short entries here where I've got it in the seafoam green and here, and then the magenta here in terms of potential entry points for you if you're following along with this, in terms of kind of an automatic, or I should say, it can't be automated. It's a mechanical system, but once you get one of these lines, that's an opportunity for you to participate in the trend or the reversal or the pullback. It's up to you as to whether or not you want to take the trade based on what you see. So that I think covers us with regards to all of the parameters. Now, we call this ATR line the stop loss line. Now, if I apply it, we look here, you got to recognize that that's because it's a three period ATR. That can be more risk than you might want to consider. So, for example, here I've got a breakout. You see, we get a short breakout here, but the distance all the way, well, even if we use the lower one, that's a 46 tick stop. So that may be beyond what the typical trader is going to allow for, unless you were trading micros, right? This lends itself very nicely to trading micros, so you can accommodate these wider stop ranges here without, if you're in a 2 or a 3 or a 5 lot in the YM and you had a 46 tick stop, well, that may be more than you want to carry. So, of course, nothing says that you have to use the ATR stop. That's just going to be a function of whether or not you're going to see some of these statistics up here, and we'll get to those in a second. So here, of course, right, when the market's trending, of course, you don't know that, right? You don't know that that's coming. But when the market is trending, trailing with these ATR stops, right, you're going to catch the entire move. And again, this is atypical, right? I mean, while it's common for the market to rally in the last few minutes of the day, this kind of an extreme is unusual. It's likely all tied to option expiration that happened on Friday. So let's go back just earlier in the week and look at some of these trades so you can understand what it's doing here. So this is here's not a bad section here. Again, I'm in a 377. We'll just assume that's where it was at that time of day. So coming out of the chute here, we can see the market is heading down here. Obviously, the color coding makes that easy to see. Well, here's a potential trade here going off that you may or may not want to take. We're reversing because we're breaking the ATR line here. So as we break here, we go to blue. Now, we get an entry here based on that reversal. Now, do you want to take that trade? That's up to the individual. We've been trending down. We get a potential reversal here. Obviously, again, with the benefit of hindsight, we can see that would have, you might have gotten, if you took the break here, let's assume a tick or two of slippage. There's actually more than you realize there. There's 12 ticks there. So could you have taken that trade on a scalp? Sure. You would. There's 12 ticks there, right? But would you have wanted to go for 8 to 10 ticks with a stop this far away, right? Again, the stop, if you took that trade to the stop, is 50 ticks. All right, so again, you can't just trade this blindly. There has to be some discretion as to when the conditions are appropriate to take the trade, and then once you're in the trade, it's a function of your own personal money management rules and how much risk you'll tolerate on any one trade. Again, that's why I suggest this is ideally suited to trading the micros, where you can give it that much more room. Okay, so but let's look at a couple of examples here. So here, again, would be a judgment call as to whether you're going to make that. Here, so I get a reversal followed by yet another reversal. So as we break here the line, the little dotted line here, we're getting a reversal signal. Here's the entry. So as that fires here, you get your entry established here. If you took that trade there on the breakdown, let's assume a couple of ticks of slippage, and you just went down to the low, well, there's 36 ticks. That's $180 per contract on a single. Now, yet again, we reverse again. So here's the reversal. Here, the little green line is the entry. Do you want that trade? Well, again, assuming a tick or two of slippage, there's actually 15 ticks there. Then the same thing happens here. So we get a reversal followed by a breakout. Now, the breakout is established by the ATR band here. So we only show the breakout after the ATR dots here, the line, has gone flat. Now, once it goes up or down, once it increases, we get a potential breakout bar. So as this starts to move up, this line will appear on your chart as a potential breakout. Now, do you want that trade? Well, again, assuming a tick or two of slippage, right off the bat, you got 17 ticks there. Right, just off that. It looks smaller to your eye, but there's 17 ticks there. Right, so if you're scalping these in the 8 to 12 tick range, I mean, you're off to a very good start on the day. So yet again, it's a function of, do you want to scalp here and then let a runner continue on? Because if you got your scalps out and then this thing ran, there was another 40 ticks there. pretty good, right? So at this point, you don't know that that's the IB high because we're not to 1030 yet, but at this moment in time, it is the IB high. It's not, we don't confirm it until we get to 1030. But now here we start to come down. So here's the reversal. Now, the reversal, the issue with the reversal is always you're going to be a long distance from the stop, right? So I personally don't take the reversals unless it's at a critical level that I might have been paying attention to because the distance to the stop is so far. What I like to see is the reversal, and then I'm looking either for pullbacks or breakouts. So here you'll note if I draw it, we see the ATR band is going sideways. Now it starts to fall lower. So as soon as it moves down, it triggers this little entry here. So here's the potential breakout entry after the reversal. So here's the trade that's an option to take. So again, assuming a tick or two of slippage, there's 23 ticks just off of that initial entry. So if you, again, it's a function of, do you want to take two? Perhaps you take a 3 lot. So you're taking 2 and you've got a target of 8 to 12 ticks, and then you let a runner continue on in the trend by attaching it to the ATR line, because you end up here, right? Even with the little kickback here from your entry. I mean, if you take it all the way down, there's 138 ticks there. So again, it's a function of how aggressive you want to be, and then your risk tolerance and your money management rules. Because here we get one breakout here, then we go flat again, and then as it heads down, we get another breakout here. As it goes flat again, well, in this case, it just keeps going here until we get the reversal here. So if you took this trade, we just continue to go lower and lower and lower until we go flat. And while at this point there would have been an entry here, if it had continued to go further, it actually doesn't trigger the entry because now we get a reversal. Now, this is very common, so we reverse right into the IB low. That becomes once it's broken, it becomes the resistance, and then it kicks down again. Now, note here we get another reversal. You do get another little entry here, but do you want that trade? Well, there's actually 7 ticks there. So again, whatever you're after, just be questionable as to whether you wanted to take that. We'll look at some ways that you might decide as to whether or not that's, again, right, you're over here, you don't know what's coming. For all you know, that's just going to keep falling. But we'll look at some ways you might filter some of these trades. Then we get the reversal, right? Again, I don't trade the reversals because here this is not bad, but that's actually the distance from the entry to the stop. That's 58 ticks. Again, it looks bigger than it actually is. It looks like it's not that much to your eye. So again, that's why these are so well suited for trading in the micros. So if you took this trade here, your entry is right here. So let's assume a couple of ticks of slippage, right? You're already, I mean, just to the pivot here, there's 80 ticks. Again, it's bigger than it appears. So then we get, now note here, we go flat. The ATR band goes flat. As it increases, then this line is triggered. We get another breakout here. So again, assuming some slippage, if you just took it to the open, there's 53 ticks. You took it to the IB high, there's 103 ticks. So there's all sorts of potential here. It's really, I mean, when the market is trending in these smaller little micro trends throughout the course of the day, these can be very, very, very profitable. Here we get a reversal, and then it's kind of the same idea as to whether or not you're going to trade reversals. Again, another reversal, a breakout, and I'm looking for a pullback. Let's see, I've got to go a different day here, and we'll find a pullback here. So here's a couple of pullbacks. Okay, so we get the reversal here. So here's the entry, right? That would have been a winner. Here's another one. It's not filled till here. You probably got 6 or 8 ticks out of that. It still is telling you the trend is down. Now here's where we have flat ATR band here, but we get reversals back to the band. Now we allow for a 2-tick break of the band here before it comes back down. You recall that was in the settings. So here, each one of these are potential entries for you based on a pullback, because we don't change the trend. So each one of these would have had, oh shit, I mean this one, even this little one here, there's 18 ticks. This one here, assume a couple of ticks of slippage. Come back here, a couple of ticks of slippage. If you went just to the IB low, that's 50 ticks. Right, so, and then you get here's another breakout here. Note we go flat in the ATR, creates the line. Once the line breaks, you've got, again, assume some slippage. There's another 64 ticks. Right, so can be very, very profitable. So let's just talk about these numbers for a second, because I know that's probably got your attention. So what you're seeing here, I've got, let me just show you here. So I've got 5 days of data. So I'm only looking at the last 5 days, Monday through Friday of this last week. RTH session, so we're not including any overnight here. So what you'll note here, we're getting some statistics. Now the win rate is a function of the target that you have set. So let me go back into indicators here and show you this. So this can be, and we'll do some variations here. So currently in the YM, I have this set to an 8-tick target, meaning that if we're trading breakouts, 85.71% of the time, if you took the breakout trade, you reached your 8 ticks prior to being stopped out. Now, just to demonstrate how this can vary. Let's say I wanted to increase the ATR period. So let's say I went to a 34 period ATR, but I'm going to keep the multiplier at 3. And then I'm going to go to, let's go up to 12 ticks. Now I'm going to apply that. All right, so I get a slight change here. So now I still have a total win rate of 59.29. The reversals, very profitable. Again, that's a big stop. So recognize that while it shows a 75% win rate, in that other 24.4% of the time, you have the potential for a much more significant stop loss here than your 12-tick target. But still, 75% of the time, it's making its 12-tick target, right? It's a question of whether or not you want to give it that much room. Once again, I emphasize micros as a great place to start. Breakouts now goes to 84.78. Pretty good. So if you're trading each of these breakouts, as we look back here, you'll note that it will get the 12-tick target prior to being stopped out, and that's 84.78% of the time. Well, let's say I went to 16. Went to 16. Right? Now, of course, it's going to start to reduce because I'm after a bigger target, but still 71% of the time. Reversals 71% of the time. Pullbacks, less profitable here being a pullback. Only 22% went to their target. So maybe that's too much. If we go to, let's say, if you were working in the S&P and you went to a 4-tick target, which would not be unreasonable if you were trading multiple contracts. So perhaps you were trading a 3 lot and you had 2 go out at 4 ticks and then you let a runner go. Again, something that would be ideal for micros, but you can do the same thing here in the YM because we're down to, we're at $5 a tick as opposed to 12.5 in the ES. Bring this down a bit. That's our tick size calculator. But you can see here as we start the day here, when these trends are kicking. So here, just you're off to the open. You get a pretty good push up here to your first half an hour. You already get a breakout because we go flat and then we get here and then we get the little kick. So with that, even if you went to the open, there's 30 ticks. Reversal, again, from reversal to the stop, that's too wide for me. Here's another reversal, right? That would have been a winner. Here's a breakout. Well, it looks like it would have been small. Again, assuming a little bit of slippage, that's actually to the IB high. Oh, there's 13 ticks, so if you had a 12 or an 8-tick target, right, you're going to look pretty good. Here, I've got this set to 4 ticks, right? So again, that's why we get so high here. We get up to 89.9. They're going to make their 4 ticks prior to getting stopped out, right? But again, that other 11% of the time, right, you have the potential for a breakout to stop you out pretty substantially. So likely, for example, if you were in this trade here and we kicked all the way back, so if you took this trade and we kicked all the way back 27 ticks, well, if you're going to hold it to the stop line, that's 45 ticks. So you can see here, if you took this, you probably got it actually. Right. So if we look here, there's 6 ticks. So if you had a 4-tick target, you got it. Here, you didn't get entered. Here's the reversal. Now here, right, this would have been a loser. You don't get far enough to get your target. You don't get stopped out. So technically, I'm kind of going through this detail here so you recognize that while this ultimately ends up being a winner, you would have had to withstand, assuming you're filled at the high, you would have had to withstand 40, almost 45 ticks of drawdown on the way to getting to your 4 or 8-tick target. So questionable, right, as to whether or not you would stay with that if that's coming all the way back. But technically, since we don't break the line here to be stopped out, that's going to show in these numbers as a winner. Right? Again, just trying to get very clear about that so that these don't confuse you. I think that there are well, let me show it to you this way. This is how I use it. So I think you understand the basic parameters. And ideally, what you would do here is do some experimenting. So you might have particular ATR settings that you're comfortable with. You know, a 34.3 may be too much, too small. You could go down. Again, the default is I think as it ships, it ships as you first load it. Actually, I think it's a 10.4 with a 4-tick target. All right, so then these numbers are going to go very, very high. So for example, if we stay now we've got 86% here. If we stay at a 377, if we went to, for example, because I know the YM you'll often see it at a 233. Well, now look at these numbers, right? The breakouts just got amazing, 98% of the time, right? You're going to get your 4 ticks prior to getting stopped out. Well, and of course, again, just the kind of thing that you would want to do and say, okay, well, if I'm in a 233, let's say I wanted to go for 8 ticks on my first, right? Well, I'm still at 91%, right? So if you're after 8 ticks prior to getting stopped out, right, and if you let one run, right, the beauty here is not that you got your 8 ticks. It's that you got your 8 ticks and then you had a runner that just carried on. So here being a good example. Okay, so you got your scalps out, but you know, if you see that thing run, you're going to be a little bit sorry you didn't let something go with it. Of course, the idea is to catch one of these bigger moves, right? It's not to get your 8 ticks or your 4 ticks, even though that looks pretty in the statistics. The goal here is to get those first 1 or 2 scalps out, depending on your approach here. I'll often trade it in the 3 lot, so I might be after 4 ticks on the first 2, and then the ATM would move the stop to break even, and then I just let it run, because you just never know, right? You never know when you're going to get something that all of a sudden gets legs, right? You just don't know. So to take this and take 8 ticks and then see it fall, Jesus, what is that? What does that fall? All right, 94 ticks, right? You don't want to miss that. Same thing here. Right? Once they go, you don't want to be just, I shouldn't say it, right? So it's up to the individual trader. Some of you may be quite content with 4 to 8 ticks, and you do that 5-6 times a day with good risk reward here and your own stop management. That could be just fine for you. But some of these moves are so substantial. The whole point of this is to get you into a trend and then keep you in it. Right? That often the hardest thing to do when you're in a trending market is to keep your hands off the mouse, because you get up to $300, you think, oh shit, I don't want to let that get away, so you go to take it. Well, the idea is to try and fight that urge. Right? So as long as we stay above the line here and it continues to trend, you don't want to just be out with 8 ticks. You want to let at least, maybe you have a 2 lot, so that your first one's out at 8 and then you let one run. A lot of options for you. All right, so here you see your breakouts. Here's your pullback. So here, this is a great example of a pullback here. So we come back, we don't touch the line. Here's our entry. Once we break it, again, right, you're going to get your 4 ticks. Here's a nice run here, and then I get a breakout. Here's a potential place to add. So if I took this and I had a runner, and then I got another breakout, that's a place to add to it. Right? Now, do you want to add here? Well, we're getting pretty long in the tooth, but you don't know that, right? At that point in time, you don't know where that's going. It's always easy in hindsight. Your brain will say, "Oh, well, I wouldn't have taken that one," right? But when it's sitting right here, would you? Right? You don't know, right? You're thinking it's 11:17. We're going down to test the IB low, right? Doesn't quite make it. Right, and then you got the reversal. So you got greedy here, looking for that. It turns, and now you're back to the IB high. Right, very common, right? Particularly on a range day, IB high, IB low, back and forth. Ultimately, we get through, and then we're back in. Okay, so how am I doing? 23 minutes. Okay, with that, I'll just remind you that you can come over to our website here. It's tradedevils-indicators.com. Link is directly below the video. And if you're interested in any of our indicators, right, you just come over here, request a 5-day free trial, right? So we will send you every one of our indicators. So you'll have the opportunity to do a lot of experimentation and test them in sim, however you'd like to make that evaluation. But it's a full working versions of all of our indicators for 5 days, right? Totally free to you, and we think that's a good way to evaluate whether or not this fits in well with your trading plans. All right, so there you go, tradedevils-indicators.com. Just click here, again, link directly under the video. Okay, talk to you later.